So let's dive in. It is tax day. It's April 15th, the 113th year since the first income tax became law by our federal government. That was back in 1913. That started at 1% for incomes above certain thresholds. So it only applied to a very small number of people. And you know the rest of the script. It didn't quite stay there because you probably, like me, pay your federal income taxes every year, or if you get behind, you do them 2 or 3 years at a time. Uh, but here's Jason Mercier with Mountain States Policy Center with a bit of history about our federal income tax.
And so, see if these arguments sound familiar. We're going to impose a limited tax that's only going to impact about 2% of the population. It's going to be on millionaires, and you don't have to worry about this tax because you'll never pay it. Well, unfortunately, all of us today on April 15th owe federal income tax. Yet that was the exact promise made when Congress imposed the income tax back in 1913. After the 16th Amendment was ratified, Congress quickly followed up with what they called a millionaire's tax. It was estimated to only hit 2% of the population. Its rates ran between 1 to 7%. You fast forward to 2027, and this just proves what happens with income taxes. The rates increase, the brackets expand. So this limited millionaires tax passed in 1913, now all of us are subject to, and I would love a 7% rate, but the rates now are 10% to 37%. And this is probably the future that Washington is looking at if the Supreme Court doesn't do what every other court before it has done and strike down income taxes that don't conform with the property restrictions.
Now, when Governor Bob Ferguson signed SB 6346, our new millionaires tax, signed that into law just over 2 weeks ago, he was touting the benefits to the average Washingtonian who will get some money back. They're doing a pretty dramatic expansion of the working families tax credit as part of this redistribution of wealth. So here's what he said on the bill signing day.
Since I first announced my support for millionaires tax back in December, I made it clear that a substantial portion of these dollars must go back in the pockets of hardworking Washingtonians, small businesses, working families, to make life more affordable for them. What we do with this revenue matters. In the first full year of this revenue, when it comes in, more than 40% of the revenue will go directly back to Washingtonians. Let me give you 5 examples. Number 1, we expanded a wonderful program that we have in Washington State, thanks to our state legislature, the Working Families Tax Credit. Yeah. Fantastic program. This program, by the way, other states are starting to model this program, by the way. They see the success of this. This literally sends a check back to hardworking Washingtonians in the form of a check between $300 and $1,300, depending on the size of their family and their income. It's a great program. We just need to expand it. And with the revenue from the millionaires tax, we're adding 460,000 working families who receive that tax credit every single year. Number 2, funding for free breakfast and lunch for every K through 12 student in Washington State. This puts money back in the pockets of families and helps make sure that kids are ready to learn. Guess what? It's tough to learn on a hungry stomach, right? Yeah. This will help those kids all across our state. It's been a priority of mine since I ran for governor. I talked about my first stay of the state. It was the first bill I proposed as governor. And I just want to also recognize 2 folks who have been very involved in this legislation, this effort for a long time. State Senator Marcus Riccelli and State Representative April Berg. Give them a huge round of applause.
Now, critics, including many representatives of the small business community and their advocates, say it's really going to be more of a hit than a benefit to small business because of the way they structure their business and taxes. Most of them operate as pass-through entities, so business income is reported as personal income on federal taxes. So it might show that, your business brought in $1.3 million that year. That shows as personal income. Well, in fact, it's not that. Most of the time, that is going to be used for business reinvestment, potentially expanding business, hiring new employees, buying new equipment. So there's a big concern in the small business community about really there will be some B&O tax offset benefit here, but will it be enough to offset, the many numbers of folks who are concerned this is going to impact them. So again, Jason Mercier with Mountain States Policy Center believes the tax is unconstitutional. He believes it's eventually going to trickle down to each and every one of us. But he calls it pretty alarming that supporters, including the governor, know they've got all this court precedence that goes against an income tax. And the state constitution very clearly says that our income is our property.
This is the first time that the legislature and the governor have willfully and openly defied Supreme Court rulings to impose a tax on income. And how they expect the results to be differently is beyond me. I mean, you're basically asking five Supreme Court justices of the nine to say that Washingtonians don't own their income. Can that happen? It's possible. That's a pretty bold move for an elected Supreme Court justice to overturn 100 years of rulings and say, you know what, Washingtonians, we were just kidding. You don't, in fact, own your income.
Mercier did tell me that he does not hold out much hope that Let's Go Washington and founder Brian Haywood's attempt to get the state Supreme Court to allow a referendum on the income tax to proceed. He doesn't think it's going to be successful. He said that he bases that on the fact that the state Supreme Court has previously granted some pretty broad discretion for lawmakers to attach emergency clauses to legislation and have said in those prior rulings that, it's not our job to determine what's necessarily a budgetary emergency. That's what lawmakers are tasked with doing. And so he does not think that the challenge is going to be successful for a referendum, although Let's Go Washington is indicated to me that the plan is probably going to be for dual initiatives to the ballot this year, maybe one directly to the people and one that would go to the legislature. Again, that's going to take some time. It's going to take quite a bit of effort to get more than maybe 400,000 signatures, I think is what they would want to get on each of those. In order to, you're going to have some of those signatures that get tossed out by the Secretary of State. They're duplicative or whatever. So there's, still a lot of things that could potentially undo this income tax. We shall see. April 30th, by the way, set for those arguments to the state Supreme Court for Haywood's case on the referendum, if I forgot to mention that to you. And we'll certainly be in the courtroom and excited to bring you that update when it happens. Now, one of the groups that has lobbied hard for passage of Senate Bill 6346, the millionaires tax, if you will, which supporters call it as, opponents say it's an income tax that they believe will eventually be an income tax on all levels of income earned in the state. They're touting the benefits, this group is, of those who will get the redistribution of wealth. There are a lot of working families tax credit extensions. There's some benefit in business and occupation tax breaks for some levels of small business. There's some sales tax exemptions for hygiene products, deodorant, diapers, some of those types of things, where some folks do stand to gain from the income tax if it ends up being implemented. Now, Annie Kuklik is policy and research advisor for the Economic Opportunity Institute, or EOI, as I'll refer to them for savage of time. They're a Seattle-based think tank that has lobbied quite a bit for progressive revenue options and certainly was behind the income tax from day one as it moved through the legislative session in Olympia this year. And I got a chance to speak with her late on Wednesday, and she told me that the new income tax on millionaires, from their perspective, is really about correcting Washington's regressive tax code.
Washington has the second most regressive tax code. I'm sure that you've heard this many times. This means that the poorest amongst us are paying the highest percentage of their income towards taxes. Regressive really just has to do with that downward trend. So yeah, this is the first step. It's a small step. It's a historic step towards rebalancing the regressive tax code that we have by asking the wealthy, the very wealthy, the top 1% of Washingtonians to pay a little bit more so that people in the bottom 95th percentile of income earners can pay a little less.
Now, Republican Representative Travis Couture of Allen, again, he is the leading GOP budget writer and for the House, and he's familiar with some of the reports from EOI about their benefits from the coming income tax should it hold up in the courts, or again, if voters choose not to reject it, although they have rejected it at least 9 times in the past when it's come to the ballot. So here's what Representative Couture had to say.
I did read their report and some of the scenarios that they cherry picked to try to make it look as good as it possibly could. And then some just misdirection and disinformation, claiming that you're the average family or whatever their cherry picked family of a single mom and two toddlers or something like that was going to save like $30,000 a year. And if you extrapolate that across like all of the like people in the state of Washington, that would be more than our state budget. And so the math doesn't really math for some of their claims, and part of it is because they're not just talking about what's in the income tax bill, but they're talking about what's not in the income tax bill, like Apple Health for Kids, Medicaid, right? And childcare subsidies. But as we already know, those things already exist. And kids are already qualified for them. And so trying to claim savings from an income tax bill that one didn't even have those policy items attached to it at all, but two already exist is completely disingenuous. That's number one. But at the same time, like Republicans, for example, supported, bolstering the working families tax credit. It's something that the Republican caucus has pushed for years and ignored by the majority party in Olympia until just this year. And as a matter of fact, I funded the working families tax credit not through new taxes in my budget framework that I released before the Democrats and the governor back in December through the Climate Commitment Act, because that is a very grifty, a program that we're paying for, DEI studies in Africa and drum circles, all sorts of stuff for environmental justice. It's not actually doing anything to lessen the carbon impact we have in our society, but it is hammering Washingtonians with the carbon tax on gas, which is the most regressive tax that we have, bar none. So turning that back around into tax credits for working families seemed like a good move to do for us, but I didn't need to raise holy hell with an income tax to fund the working families tax credit. So it's not that we're against the working families tax credit or some of the, mild expansions of it. We're against wrecking our economy and dousing gasoline and becoming an arsonist of our own economy in order to pay for it.
Now, the Economic Opportunity Institute says that families who will get help from the expansion of the working families tax credit will be among the biggest beneficiaries of the income tax once it is implemented, because households that were previously ineligible for the working families tax credit may now be eligible for tax refunds of between $335 a year all the way up to $1,330 a year. And that is according to an FAQ, frequently asked questions from Washington Senate Democrats. Now, the new income tax will, in fact, broaden eligibility for the credit to, they estimate, another 460,000 Washington households. Right now, there are about 350,000 Washington households who take advantage of the working families tax credit. So I'll show you here, according again to the information put up by Senate Democrats, it extends the eligibility to every family earning at or below the state's what they call need standard, which is a monthly income threshold based on family size that is considered reasonable for a family to pay their bills and other expenses. And they say, for example, a family of four with an income up to $9,579 a month, not a bad income, or an individual with an income tax up to $3,816 would be eligible for the expanded working families tax credit under the income tax. Now, Representative Couture, in our interview, he pointed out that Republicans also offered an expansion of the working families tax credit, but without any new taxes. His proposal was to fund the expansion of this tax credit by using some of the Climate Commitment Act revenues, the CCA revenues. He calls it a grifty program that we're all paying for. In some cases, they've shown that some of the money is being used for diversity, equity, inclusion studies. Some money has gone to what he called drum circles, all sorts of stuff for environmental justice, as opposed to programs that really do prove there is a benefit to the environment, because that's what all the CCA funds were sold as going to provide for all of us. Um, so he says, why not use the CCA money to benefit working families and give them a tax credit there, since it's the working families who are paying so much more in gas taxes at the pump because of the CCA. He presses that Washingtonians, I should say, are still reeling, remember, from last year's record tax increases.
Can we just not forget for a second that literally last year we passed the largest tax increases in state history? All of them regressive. B&O, sales, you name it. Fees, Discover Pass fees. We taxed the joy right out of the state of Washington. And this is kind of, to me, it's like the Democrats have they're they've robbed us blind, and then they give us like a dollar back and ask us to be grateful for it. I mean, it's nuts. I mean, whatever tax relief, even in the best case scenario of what is in this income tax, doesn't even pales in comparison to the $13 billion plus that they just raised on us the year before. And so I just think it's crazy. I think that if economics was water and Democrats were in a boat, they couldn't fall out of the boat and find it. I mean, it's just nuts. We're torching our economy right now, and it is like a five-alarm fire.
So obviously, anyone impacted on either side of the fight over the income tax is invested in this. I remind you, we have Brian Haywood and Let's Go Washington, who have an April 30th date with the state Supreme Court to have arguments as they're trying to get the referendum and their push for the Secretary of State to allow them to proceed with the referendum, which right now they are precluded from doing because the bill had an emergency clause attached, which basically made it referendum proof. So they're fighting that on April 30th. In addition, Let's Go Washington is also working on a couple of initiatives, likely one that goes directly to the legislature and one that goes directly to voters, probably for the ballot later this year if they're able to pull that off and get enough signatures. So there are a lot of different avenues moving forward, as well as the legal challenge that I mentioned as we opened here today in Klickitat County Superior Court. There is a new report out from Mountain States Policy Center showing that Idaho's income tax rate, lowered last year to a flat rate and lowered in previous years, from a high rate of 7.7 or 8%, way down to what it is now. Well, as it turns out, that lower income tax rate has translated into more income tax revenue coming into the state of Idaho. Why should we care? Well, because this is relevant given the fact Washington state has a brand new, yet to be implemented income tax. So we're going to wade into that pretty fascinating conversation with Mountain States Policy Center's president and CEO, Chris Cargill. So you'll want to hear what he has to say. So let's dive in. It turns out our neighbors in Idaho, and they've had a state income tax for quite some time, but cuts in recent years to the amount of that income tax has translated into a dramatic increase in income tax revenue for the state of Idaho. Of course, that is contrary to the mantra of tax hike champions who argue if you cut tax rates, government's going to suffer, revenues will fall. That has not been the case in Idaho. And in a report from Mountain States Policy Center, results really don't fit that narrative. So, this is Chris Cargill. He is the founder and CEO of Mountain States Policy Center, talking about what they have found regarding Idaho's income tax.
And this is something that those of us kind of in the free market movement have been talking about for years. We have evidence from the past of the federal government doing this, where the income tax would come down and then revenues would go up. And the reason for that is because the more that you lower the income tax, the more workers that you'll see come into the system, the better the economy does. And then as a result, more people start paying into income taxes. So it is essentially the easiest way to explain it to people is, look, would you rather have one person paying 10%, or would you rather have three people paying 6%? What is going to be more? Of course, the three people paying 6% is going to be more than the one person paying 10%. And so that's really the theory here that we tested. So we took a close look at what Idaho has done. And Idaho, since the mid 2010s, 2014, has been steadily lowering its income tax. So in 2014, it had an income tax rate of 7.4%. Effectively, that was the top rate. Although you hit that rate if you made really any money in this state. It went to a flat rate of 5.3% starting last year. And so Idaho has essentially lowered its rate by 2.1%, a huge amount just over the past 10 years. So, of course, at the time of all of these reductions, we were hearing a lot from people, oh, this is going to cause revenue to fall off a cliff, and we can't afford tax cuts, and we're going to be scrapping for pennies, and all of the things that we've always heard about tax reductions. But if you go back and look at the revenue since then as well, revenue has almost doubled in Idaho, the income tax revenue. We're not talking about any other tax, we're just looking at the income tax. And when you look at the income tax, the rate has come down in Idaho 2.1%, but the amount that Idaho is bringing in has increased by about 95%.
So, again, a reminder, as he mentioned, going back to 2014, so 12 years ago, the state income tax in Idaho brought in about $1.16 billion in income tax revenue. That's not their other taxes. This is specifically income tied to the income tax. By 2025, that number had climbed to roughly 2.26 billion. That is a 95% increase, or nearly double, even though they went to a flat income tax rate last year, and a lowered rate at that. So, as Cargill points out, if tax cuts truly starve government, Idaho should be really scrambling to make up that lost revenue, but it's quite the contrary. So he told me that, if you're going to have an income tax, which they're not a fan of, but he says if you're going to have an income tax, it should be like Idaho went to last year, to be fair. So everybody's paying the same flat rate, no matter the level of your income. Right now, of course, the millionaire's tax that was just recently signed into law in Washington will be 9.9% on income in excess of $1 million, or combined household income above the $1 million threshold. But opponents contend that that is eventually going to be a tax on the income of all income earners in Washington, no matter how much money you make. So he said, you know, Washington really should be looking at what has happened in Idaho, since they're not new to the income tax. And he says it's not a fair comparison to simply say, which I heard over and over again during the legislative session by majority members pushing the income tax. They kept saying, "Oh, look at Idaho. They're doing great. They've got an income tax. They've been raking in the revenue for years." Um, they left out the part of the conversation where it's now a flat rate in Idaho, where everybody pays the same rate, and it has been lowered dramatically over the past 11, 12 years.
Now, Idaho, when you're comparing it to Washington, Idaho doesn't have a state property tax. So it's a lot different than what Washingtonians have to deal with not only a huge sales tax, a huge gas tax, a huge property tax, and now a huge income tax in Washington state. You compare that to Idaho, which doesn't have any of those things. It's there's no question that businesses and that folks who are perhaps more wealthy individuals would be much better off in Idaho than they would be in Washington. And I think that, Carlene, the interesting part about this is if you remember during the debate on the income tax in Washington, there were some legislators, including some of the more senior Democrats, who were saying, oh, well, Idaho has an income tax and they're doing just fine. And they were trying to make it seem as if Idaho was worse off than Washington. The numbers do not tell that story. Washington State is headed off of a fiscal cliff because of some of the policies that it has adopted.
So, some fascinating perspective on Idaho's income tax and lowering that rate, bringing in more income tax revenue for the state. Um, it is an interesting conversation that we probably should spend some more time here having in the state of Washington. I encourage you to check out the article at Mountain States Policy Center. So that is a wrap on today's episode of Washington in Focus Daily for this Friday, April the 17th. Check out the centersquare.com Washington's page, and I appreciate you watching. I hope you'll join us again next week. Have a great weekend.